Good day traders, welcome to a new video on the YouTube. Today I'm going to look at a breakdown on some trades that I took this week, as well as the current progress on the challenge with leverage, and some exciting news for the month of July. They have a 50 off 50 promotion, meaning that you get $50 off a 50k account. So I'm going to post that over here, and then the link will be in the description, and you can use the code to get that $50 off, which is a great save. Okay, let's get into the video. So we're going to look at, first of all, as pound dollar, and we're going to look at some setups that worked, some that did not. So let's first have a look at some setups that did work. So on Wednesday, when we had this big sell-off, was a great trade. So I'm going to quickly just plot the new day VWAP, and I'm going to plot the fair value gap right there, and that was the setup. Pretty simple, right? Not too many complications. So yes, we had a fair value gap right there as well. I had some reasons for why I would want to take this one. That's in a later video. But if we just look at liquidity, so we had this sell side liquidity resting below this low, which price already took out with this push down, but it completely broke it. So I did not count this as a sweep. I saw this as a run on liquidity because of the strong bearish closures below this low. And then the next level of sell-side liquidity would have then been this low, right? So as per usual, the entry is pretty simple. We have a limit order at the fair value gap, stop loss above the candle that created, well, candle 2. So it would be right up here. That's where the stop loss would be, and then take profit at 2R or these lows, which resulted in exactly 2R. So that was a pretty straightforward, simple trade setup. Nothing too complicated about it. Are we in line with the daily VWAP? Do we have a fair value gap? And do we have liquidity, external range liquidity that could trade into? Okay, that's pretty straightforward and simple. Okay, now next up is Thursday. So a pretty similar setup, which I initially thought was okay, decent setup, but I want to show now why I, in hindsight, think it didn't work out, which was a loss. So let's just we'll keep this on for now. Just make it a little bit thinner. Started off new day. We have a new day VWAP, and we have the fair value gap below. Okay, so it started off as looking as pretty much a similar setup. We have a entry, we have our stop loss just above the high. Similar, this candle has no wick, this candle had no wick. So all in all, coming from this short, this setup looked relatively decent. So I really thought that we could potentially get a 2R price trading back down into this fair value gap, potentially to get a trade back down into this range, but price just went against us. So let's have a look at why I do think that setup didn't work out the way I expected. So if we just quickly take this away, if we just look at this price action, this is our most recent swing high, and this is our most recent swing low. So this for me then is the range that we're trading within. Okay, if price is going to take out internal range liquidity, which we had right here in these swing lows, it will then potentially reach back to external range liquidity, which is above these highs. Now once price trades above this external range liquidity, we could then see price trade back down to internal range liquidity, which is this fair value gap, which it trades back into, and then we get the end of the day and just the holiday, 4th of July, price action just moving sideways. So in comparing this then with what happened over here, is that it was pretty straightforward. we broke impulsively below this low, running this low, it was heading towards sell side liquidity. It was a clear, obvious objective. But in this case, we had buy side liquidity above, we had the internal range liquidity. So all in all, it was actually more of a 50-50 situation where price could go up, could go down. It wasn't as high probable compared to this trade. But if you just look at the principles of all the elements of a new day VWAP, you look at your fair value gap, then this setup and this setup looks pretty similar. So yes, you can just follow the 3 tick boxes. Do we have a new day VWAP? Are we below it? Do we have fair value gap? And we take the trade. Simple, straightforward. We can do that over and over again. But sometimes you need to look a little bit deeper to find some more detail to clarify, is this trade a good opportunity or a bad or not so great opportunity. Okay, so that's then on this trade. So let's have a look then at another pair. Let's look at gold. Gold was a little bit of a fickle story this week. If we just look at price running above these highs, so Tuesday's highs, ran above it, tried to break above it again but failed, and then we made this lower high and price traded towards the downside and it ended up in this sideways moving market. Now I just want to quickly touch on something that when price is 50-50. So if we look at the daily, on the daily we have this bullish fair value gap. Okay, so our expectation then is trading into the daily, we kind of respected it. So the expectation is to see a continuation back towards the upside. If we then drop to the 4-hour time frame, this is where the 50-50 comes in. So we have another bullish fair value gap right there that we're expecting it to go long from, but then also we have a bearish fair value gap right here. Right there we have this bearish fair value gap. So price, if we pull this out, it's just ranging up and down between these two fair value gaps. So either we'll create a new, we'll want to see a new 4-hour fair value gap towards the upside, reaching for these highs, because this is our buy side liquidity, external of the range, or we'll see price trade bearish fair value gaps to the downside, because that's the external range. So currently we're just trading in this internal range liquidity, the fair value gaps inside the range created on the 4-hour time frame. You can also see it's an inside day because this high is previous day high, this low is previous day low. Friday was an inside day, and we know an inside day signals a big move on the following day. We will often see price run both sides. Not always, but sometimes we do see price runs to one side and then the other side, or the downside and then the upside. So different things that can happen, but it's just good to see that when we have this 50-50 situation, it's good to just not take the trade, because if we keep that in mind. Now let's jump to the 1-hour time frame. Let's add our new day VWAP. We're above. We have a bullish fair value gap above it. Yes, we have price trading into it. Stop loss below the low. Take profit at 2R. It's in line. It's towards the upside. That's all fine. And what do we see? Price trades into it and it's just moving sideways. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 hours, a whole day of price literally going nowhere. You enter the trade here and you close the day right there. So it could still go up because price has not yet violated the setup. The stop loss is below this low. So the setup is still valid. But just taking high time frame liquidity, internal and external into consideration, we can save ourselves from all of this drawdown in this trade. If you take this trade, you shut it down, you close the chart, you walk away, and you only come back once you get an alert for a stop loss or take profit, then it's fine, I guess. Then, but if you're more aware of the trade and want to manage it, You don't want to sit in this type of price action. Guys, so that's all that I wanted to show you guys. Remember, if you watched till the end, well done, thank you. So remember, for the month of July, you have a 50 off 50k accounts with leveraged. Absolutely great. I'm enjoying trading with them. I'm currently 1.2% in profit in the account. I was up 4%. Had a bad week last week, down into -1%. This week up to 1.2%. So all good. We're getting there. We're going to make it work. And then I'll see you in the next one. Cheers.